humble beginnings to transforming the financial landscape, John C. Bogle's vision and relentless pursuit of a better investment model have left an indelible mark on the industry. Join us as we explore the journey of a man who redefined investing and built an empire that continues to shape the future of finance. Chapter 1. The Early Years. John Clifton Bogle was born on May 8, 1929, in Montclair, New Jersey. He grew up during the Great Depression. The economic hardships of the era profoundly influenced his outlook on life and finance. Bogle's family faced significant financial struggles. His father was a successful businessman, but he lost the family fortune due to poor investments and alcoholism. This early exposure to economic instability instilled in Bogle a deep understanding of financial responsibility and the importance of prudent investing. Despite these challenges, his mother, Josephine, maintained a stable and nurturing home environment. She emphasized the value of education and hard work, values that would shape Bogle's future endeavors. Bogle's academic journey began at the prestigious Blair Academy, a private boarding school in New Jersey. Here, he excelled despite his family's financial difficulties. A pivotal moment came when he was awarded a scholarship, allowing him to attend the academy. At Blair, Bogle distinguished himself as a bright and hardworking student, particularly excelling in mathematics. After graduating from Blair Academy, Bogle attended Princeton University, where he majored in economics. It was at Princeton that Bogle's interest in finance began to take a more defined shape. His senior thesis, The Economic Role of the Investment Company, laid the groundwork for his future innovations. In this thesis, Bogle argued that mutual funds should be managed in the interests of their shareholders and criticized the high fees and poor performance of many actively managed funds. This groundbreaking work earned him high honors and set the stage for his future career. While at Princeton, he worked various jobs to support himself, including waiting tables and working as a dormitory monitor. These experiences not only helped him financially, but also taught him valuable lessons in discipline and time management. Another significant moment in Bogle's early career was his summer internship at Wellington Management Company, a major investment firm. This experience provided him with practical insights into the world of finance and further fueled his passion for the industry. His performance impressed his superiors, leading to a full-time position after graduation. Bogle's combination of academic excellence, practical experience, and early exposure to financial challenges laid a strong foundation for his future endeavors. Chapter 2. The Early Days of Vanguard. Jack Bogle founded Vanguard in 1975, after a significant setback that could have ended his career. In 1974, Bogle was fired from his position as CEO of Wellington Management Company, following a merger that didn't go as planned. Determined to continue his work in the financial industry, he seized the opportunity to create a new kind of investment company, one that would operate on a unique and revolutionary principle, putting investors first. Bogle's vision for Vanguard was radical at the time. He wanted to create a firm that was owned by its funds, which in turn were owned by their shareholders. This mutual structure ensured that Vanguard's interests were aligned with those of its investors. It would minimize conflicts of interest and focus on delivering value. Bogle named the company after HMS Vanguard, Admiral Horatio Nelson's flagship at the Battle of the Nile. The early days of Vanguard were fraught with challenges. The company started with limited resources, and its novel structure was met with skepticism from both the financial community and potential investors. Many doubted the viability of a mutual company that prioritized low costs and long-term returns over short-term profits. One of the biggest hurdles was convincing investors to embrace the concept of index funds. Bogle's idea of creating a fund that simply tracked a market index rather than attempting to outperform it was seen as radical and counterintuitive. Traditional fund managers scoffed at the notion, believing that active management was the only way to achieve superior returns. One of Bogle's most significant contributions to the investment world was the introduction of the first publicly available index fund in 1976. It was the birth of the Vanguard 500 Index Fund. This fund was designed to mirror the performance of the S&P 500, a benchmark for the largest companies in the U.S. stock market. The idea was simple, yet profound. By eliminating the high costs and frequent trading associated with active management, the index fund could deliver better returns to investors over time. The launch of the Vanguard 500 Index Fund was initially met with modest success. It raised only $11 million in its first underwriting, a fraction of the target. However, Bogle's unwavering belief in the power of indexing drove him to continue promoting the fund's benefits. Over time, the fund gained traction as investors began to appreciate the advantages of low-cost, passive investing. But Bogle's innovative approach didn't stop with index funds. He also introduced a number of other practices that became industry standards, such as reducing management fees, focusing on long-term performance, and maintaining a clear, transparent relationship with investors. These principles were instrumental in establishing Vanguard's reputation as a trustworthy and investor-centric company. Chapter 3: The Growth of the Company. Vanguard's growth from a small startup to the world's largest asset management company is a remarkable story of perseverance, innovation, and strategic vision. After the modest initial success of the Vanguard 500 Index Fund, the company began to gain momentum. One of the key milestones came in the early 1980s when the fund started to attract significant attention and assets. By 1984, the Vanguard 500 Index Fund had surpassed $1 billion in assets under management. Throughout the 1980s and 1990s, Vanguard continued to expand its product offerings. It introduced a variety of mutual funds and services that catered to different investor needs. In 1986, the company launched its first international index fund, allowing investors to diversify their portfolios globally. This was followed by the introduction of bond index funds, sector-specific funds, and more. A significant milestone in Vanguard's growth was the launch of the Vanguard Total Stock Market Index Fund in 1992. This fund offered investors exposure to the entire U.S. stock market. It further solidified Vanguard's reputation as a pioneer in low-cost, broad-based investing. By the end of the 1990s, Vanguard's assets under management had grown to over $500 billion, driven by its expanding product lineup and the increasing popularity of index investing. Vanguard's growth had a profound impact on the broader financial market and asset management industry. Bogle's advocacy for low-cost investing in index funds challenged the status quo and forced many traditional fund managers to rethink their strategies. As Vanguard's index funds consistently outperformed many actively managed funds, more investors began to question the value of paying high fees for active management. The rise of Vanguard and the popularity of its index funds also led to a broader shift towards passive investing. This shift has had lasting implications for the asset management industry, driving down fees across the board and increasing transparency and competition. Vanguard's success demonstrated that it was possible to deliver superior returns to investors through a focus on cost efficiency and long-term investing, setting new standards for the industry. Bogle's leadership style was characterized by his emphasis on integrity, transparency, and a relentless focus on cost efficiency. He famously prioritized the needs of investors over short-term profits, a philosophy that resonated with many and helped build trust in Vanguard's brand. Bogle's dedication to educating investors about the benefits of low-cost, long-term investing was also a critical factor in the company's growth. He authored several influential books and frequently spoke at industry events, spreading his message and attracting a loyal following. Even after stepping down as CEO in 1996, Bogle's influence on Vanguard remained strong. He continued to advocate for investor-centric practices and played an active role in promoting the principles that had guided the company's success. Under his leadership, Vanguard not only grew in size, but also set a new benchmark for ethical and effective asset management. The culture at Vanguard was one of thriftiness, focus and dedication. Bogle famously insisted on modest office spaces, avoiding the opulent trappings that were common in the financial industry. Vanguard employees were instilled with a sense of mission and purpose. They felt a deep commitment to the company's principles and objectives. This mission-driven culture encouraged innovation and a collective effort to continuously improve services and reduce costs. Bogle believed in empowering his employees, giving them the autonomy to make decisions and contribute to the company's success. He was also known for his open-door policy and made himself accessible to employees at all levels of the organization. This approach not only fostered a sense of inclusivity, but also allowed for a free flow of ideas and feedback. He ensured that employees were well compensated and had opportunities for growth and development within the company. This alignment helped create a loyal and motivated workforce dedicated to Vanguard's mission. The company today. Today, Vanguard is a titan in the asset management industry. As one of the largest asset managers in the world, Vanguard continues to lead the industry with its innovative products and services. As of the latest reports, Vanguard manages over $7.5 trillion in assets, and it served more than 30 million investors worldwide. The company offers a diverse range of investment products, including mutual funds, ETFs, and advisory services. It caters to both individual and institutional investors. Vanguard has offices in key financial markets around the world, including in the United States, Europe, Asia, and Australia. The company's mutual funds and ETFs are consistently among the largest and most popular in the market. The Vanguard Total Stock Market Index Fund, for instance, is one of the most widely held funds globally, with assets exceeding $1 trillion. Chapter 5. Into 2024 and beyond. To maintain its market leadership, Vanguard is investing heavily in technology and innovation. The company is focusing on enhancing its digital platforms to provide a seamless and intuitive experience for its clients. This includes the development of advanced robo-advisory services, which use algorithms and artificial intelligence to offer personalized investment advice at a fraction of the cost of traditional advisory services. Vanguard is also expanding its product offerings to meet the evolving needs of investors. This includes the introduction of new ETFs and mutual funds that provide exposure to emerging markets, sustainable investing, and other niche areas. Additionally, Vanguard is exploring opportunities in the fintech space, leveraging cutting-edge technologies to streamline operations and improve client services. Despite its strengths, Vanguard faces several challenges that could impact its future trajectory. One of the primary challenges is the increasing competition in the asset management industry. As more firms adopt low-cost, passive investing strategies, Vanguard will need to continue differentiating itself through innovation and superior client service. Regulatory challenges also pose a potential challenge. The evolving regulatory landscape could impact Vanguard's operations and product offerings, requiring the company to adapt quickly to new rules and standards. Moreover, the global economic environment presents uncertainties that could affect market performance and investor sentiment. To address these challenges, Vanguard is committed to staying agile and proactive. The company's focus on continuous improvement and innovation will be crucial in navigating competitive pressures and regulatory challenges. Vanguard's strong culture of putting investors first ensures that it will remain resilient and adaptive, capable of turning challenges into opportunities. By staying true to its core principles and embracing innovation, Vanguard is poised to continue its legacy of leadership in the asset management industry. The company's strategic initiatives and commitment to excellence will likely drive its growth and success well into the future, honoring the vision and principles of its founder, John C. Bogle. Chapter 6. A Parting Shot. John C. Bogle passed away on January 16, 2019, at the age of 89. His death marked the end of an era for the investment community. His passing was widely mourned by financial professionals and investors alike, who remembered him as a visionary who democratized investing and relentlessly advocated for low-cost index funds. His contributions were recognized with numerous awards and accolades, including being named one of Time magazine's 100 most influential people in the world in 2004. Bogle's death was not only a significant loss for Vanguard and its clients, but also for the broader financial community that benefited from his relentless pursuit of ethical and investor-centric practices. His influence endures through the Bogleheads community, a group of investors dedicated to the principles of low-cost, passive investing. The John C. Bogle Center for Financial Literacy continues to promote his values, ensuring that his impact on the industry and his mission to empower individual investors lives on. Bogle's life and work have left an indelible mark on the world of finance, cementing his legacy as one of the most important figures in the history of investing.